Hello, friend. Welcome. Today, we're going to talk about something a little different. We're not in a hurry, so if you like, grab yourself a nice coffee or tea first. Because what I'm going to tell you goes far beyond those 30-second stock market hits record high headlines on the news. Today, we're going behind the curtain. I want to tell you what's really cooking up in the kitchen behind the glittering showcase of the market, what the world's richest people are doing quietly right now, at this very second. It was 3 weeks ago. A Friday afternoon. While most of us were making weekend plans and trying to clear our minds, a document surfaced in the boring, gray archives of the U.S. Securities and Exchange Commission, SEC. It was called Form 13F. Normally, these documents are routine papers that even financial analysts quickly glance over, but this time was different. What I saw in that document captivated me, to put it mildly. Bill Gates, the man who founded Microsoft, whose fortune is almost entirely in technology. Do you know what he did through his foundation? He sold 2/3 of his Microsoft shares in a single quarter. Look, I'm not saying he reduced it a little. I'm not saying he balanced his portfolio. This is a full-fledged liquidation. He got rid of years of hard work, the company bearing his name as if he were salvaging goods from a fire. And what's even more interesting, as I delved deeper into those archives that day, I realized Gates wasn't alone. It was as if there was a secret phone exchange between them, from Bezos to Zuckerberg, even Warren Buffett, whom we said would never sell. Everyone headed for the same door, the exit door. Now, let's take a deep breath and ask this question. What do these men know that we don't? In the last 6 months, a total of $89 billion worth of shares were sold. Can you imagine that figure? While the media constantly tells us fairy tales about everything being fine, a soft landing, and a great economy, the ship's captains are lowering the lifeboats. And do you know what's the most terrifying part? They do it so quietly, so professionally, that no one notices. Let's examine this story from the very beginning, in all its details, piece by piece. Because this story concerns your retirement, your savings, and your future. First, let's put aside the lie that everything is normal. These are routine sales. I'm going to speak to you with data, because no matter what those smiling TV presenters say, mathematics is stubborn. Let's focus on that 6.5-month window between July 1st, 2025, and January 15th, 2026. What happened during this period? 1. Jeff Bezos and the 9-day panic. Jeff Bezos is the father of Amazon. Before 2019, this man wouldn't sell more than $3 billion worth of shares in a single year. So what did he do during this period? He sold a whopping $8.5 billion worth of shares. And do you know how long it took him? Just 9 trading days? Think about it. 9 days. This isn't a "I have to pay taxes" sale. This isn't a "I need cash" sale either. This is an urgent exit driven by the need to get as much as I can while prices are at their peak as profit. 2. Mark Zuckerberg and Meta. Zuckerberg sold $500 million worth of Meta, Facebook shares. They say it's for my child's future. But the timing is significant. He's selling at a time when technology stocks are soaring and everyone is obsessed with AI. So, buyers are lining up. 3. The Jamie Dimon shock. This is the name that worries me the most. Jamie Dimon, the CEO of J.P. Morgan Chase, one of the world's largest banks. This man has control over all of the bank's data. He sees credit card spending, bad loans, and the state of companies in real time. And since 2005, for a full 19 years, he hadn't sold any of his own bank's shares. For the first time in 19 years, he pressed the sell button. Do you think the reason he waited 19 years and is selling now, at the beginning of 2026, is his retirement plan? Or is it the approaching storm he sees in his bank's data? I think we both know the answer. My friend, in financial markets, it's not what you sell, but when you sell. That matters. Why didn't these billionaires sell 2 years ago? Why don't they wait another year? Why now? Let me describe it from their perspective. Believe me, the view they see is far from encouraging. First signal: valuations are crazy. In the stock market, you divide a company's price by its earnings, P/E ratio. The historical average is around 18. Where is the S&P 500 now? At 22.2. In the last 40 years, this ratio has only exceeded this level twice, the 1999-2000 dot-com bubble. Result: 49% collapse. The 2021 post-pandemic stimulus bubble. Result: 25% drop. And now we're there again. History may not repeat itself, but it certainly rhymes. Billionaires hear that rhyme. Second signal: AI hype and reality. Microsoft, Google, Amazon, they're all shouting AI. They're sinking billions of dollars into servers and chips. But let me tell you a secret. That money isn't yielding a return yet. Microsoft's revenues seem to be increasing, but its free cash flow, the net money in the company's pocket, has fallen by 7%. Why? Because expenses are enormous. What if AI isn't revolutionary like the Internet, but rather a satisfactory but unprofitable transitional technology like 3D television? Or what if it takes 10 years to become profitable? That's when these inflated stocks will explode. Bezos and Gates don't want to risk that. They're saying, let's sell while the hype lasts, and we'll see what happens when the realities emerge. So, are these guys selling their shares and putting the money under their mattresses? No. If you look at where the money is flowing, you'll figure out the strategy. And the strategy is defense. Do you know what Bill Gates bought? Waste management. Sounds disgusting, right? But think about it. Even if the economy is in crisis, even if the stock markets crash, people will continue to produce waste. Municipalities have to collect that waste. Guaranteed money. A crisis-proof business. Canadian National Railway. Freight transport. The heart of the country. The tech bubble may burst, but those trains have to run on those tracks. Berkshire Hathaway, Buffett's company. Why? Because Buffett is currently sitting on $325 billion in cash. By entrusting his money to Buffett, Gates is essentially taking refuge in a cash fortress. See, they're not chasing rocket stocks that will make me rich, that will multiply my money tenfold. They're after boring but solid castles that will stand even if everything else burns to the ground. This isn't a move to get rich, it's a move to preserve wealth. Chapter 4. The Big Picture. Real Inflation on the Street. Let's go down to the street for a bit. The macroeconomic picture that billionaires see isn't actually that different from what you and I experience in the market. The unemployment rate in America is slowly rising. It went from 3.6% to 4.2%. Don't say a little increase. In economics, this is called Sahm's rule. When unemployment rises this high from the bottom, it means a recession has entered the market. It just hasn't been officially declared yet. I'm looking at credit cards. Delay rates are at their highest level since 2011. People have maxed out their limits. Car installments can't be paid. The consumer is tired, my friend. If consumers can't spend, companies can't generate revenue. If companies can't generate revenue, those record-breaking stock prices can't stay at those levels. And then there's the commercial real estate bomb. Those huge plazas in the city centers, half of them are empty. Working from home has become permanent. But the loans taken out for those buildings are due. What will the banks do with these bad loans? In 2008, it was housing loans. In 2026, it will be commercial loans. Billionaires smell this coming. Now, don't jump into, oh no, we're ruined, let's sell everything and move into a cave mode. Fear is an investor's greatest enemy, but ignorance is an even greater enemy. Our advantage is this: We now know what they're doing. We've seen their game plan. Now it's time to make our own plan. As a friendly piece of advice, let me tell you how to secure your ship in this stormy weather. 1. Cash is king. For now. If you have all your money in stocks, the risk is enormous. Do like Buffett. Convert a portion of your portfolio, maybe 20 to 30%, to cash or short-term interest-bearing accounts. Why? Because if the market crashes, you'll have ammunition to collect those bargain assets. Crises are opportunities for those with cash. For those without cash, they are ruin, too. Embrace the unnecessary companies. Remember Gates's garbage companies. Focus on companies that pay dividends, sell electricity, water, and food, and provide essential services to people. Companies that stand firmly on the ground, not those that are carried away by the winds of artificial intelligence, will protect you. 3. Avoid debt. If you're trading with leverage, holding assets on credit, please be very careful. Those who swim in water deeper than their head are the first to drown when the waves come. Pay off your debts, lighten your load. 4. Real assets. A little gold, a little silver. That is, physical assets that central banks cannot print, that have no printed value. Throughout history, in every crisis, gold has shone while paper money burned. Keep it aside as insurance. Final word. Be alert. Don't follow the herd. Finally, I want to tell you this. In the coming days, when you turn on the television, you will hear experts saying, "A buying opportunity while the stock market is falling. The correction is over. The rise is beginning." Your bank advisor will say, "Think long term. Don't mess up." At that moment, remember that $89 billion. Ask yourself, does this paid commentator on television know better, or does Jeff Bezos, who founded that company? Does my banker read the market better, or does Warren Buffett, a market veteran for 60 years? The answer is very clear. They sold, they got out, they're holding on to cash. The signal has been given. The sirens are sounding, but the frequency is so low that only those listening carefully can hear them. You are now among those who can hear, and the ball is in your court. Take precautions calmly but resolutely without panicking, because I want you to be among those standing strong in the harbor when the storm subsides. Take very good care of yourself and keep your eyes on the market. We'll talk again. It would be great if you subscribed too.